Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, March the 26th. So happy Wednesday, happy hump day. I hope you guys are all having a great week and hope you're having fantastic trading. Today was a little disappointing, I should say. I've got a chart up here. This is the ES, this is the NASDAQ, this is the Russell, and these are the ticks. So we started out in the overnight session. We were kind of calm. Yesterday was a pretty calm day as well. Let me move these out of the way. And then this morning we opened up. I'm just going to jump right into the ES here. And we opened up and got a little pop up here, and I'll show you when we get on a larger time frame why this was important. But I thought, we should go this way, and of course we went this way. There's the overnight low. Thought we might stop there. We didn't, and we just kind of got in this free fall thing. This is a voodoo skyline. That should have held. This should have held. That should have held. That should have held. It didn't. Kept drifting lower, drifting lower. Now this is not a crash or anything today, but it was a pretty decent, heavy or consistent selling all day long. Came down here to 57.43 on the ES and got a little bit of a bounce here. But let me take you out on a little bit longer time frame and show you why this is important. This is a 1-day chart. Let's go to a 20-day chart here. And as you can see, this is our voodoo lines. This is our voodoo fire line. That's our voodoo snow line. That is the low that the recent low 20-day chart here that we've had in the ES. Now, this was some pretty consistent selling. Just down day after day after day. We found a foothold here, and we started making our way back up. And this, I thought we would at least get back up to our fire line here at least, and we were going the other way. So what this implies, I guess I should say, we might be coming to fill this gap back down, maybe to snow line here, maybe all the way back down. I don't know. But let me show you why, why this is meaningful. If we go out here on a 1-year chart, it's a little more clear. The magnitude of the selling we've had. Look at that, all the way down to our voodoo line there, from top 61.66 down to 55.16. Long way down, and then a bounce back up. Again, we need for this thing to keep going to really turn this thing around from the bearish case back to the bullish case. It's been basically risk off pretty much all year. So this is where the year started, 2025. That's January, that's February, and that's March. So lots of chop. This is when the Santa rally kind of gave it up right before the end of the year. This dotted line is the end of the year. So even as we're coming into the end of the year last year, we just had some pretty brutal selling here, and then a lot of chop, and then we just gave it up and came all the way back down. But let me show you why this is important. If we flip this over from our voodoo lines and just put it on simple moving averages here, right? This is a 20, that's a 50, that's a 200-day moving average. And look what we did today. We got back under our 200-day moving average. It's not good, right? That should have held as support to at least push us up here, at least kind of to this level here, or more. I'll show you, give you a little more. I'll dial it in a little closer here in just a second. But because we failed on the 200-day, you'll probably hear a lot of people talking about that tonight on the news or in the next day or so. Especially depends on what happens tomorrow, as we go. But getting under that 200-day is not good. From a bearish standpoint, or from a bullish standpoint, it's good for the bears. It's not good for the bulls. And I'm going to tell you in just a second, kind of the way that I'm approaching this and that we're approaching it. So if we flip this over, I'm going to go from ES. That's the futures of the S&P 500, right? Let's just flip it to the regular S&P, SPX, right? And if you just draw some simple fib lines here, a 50% retracement from this top gets you up to 58.26. Now this is where we were actually planning on shorting this thing back down, right? And we have not gotten there. And we may, I know Trump is talking about tariffs probably right now after the market closes today on Wednesday. Trump's supposed to talk about tariffs and all that kind of stuff. And the tariffs are supposed to kick in on April 2nd, that type thing. So that could get resolved. And yes, we could come back up here. But again, today does not bode well for the bearish side at all. We're under that 200-day. I thought we might fail there, and indeed we are so far today. I thought if we get up here to that 50% retracement, we could fail there, and who knows. Now, if things change, we'll look at the economic calendar in just a second. If things change, and the things start to shift, meaning inflation numbers are better, the Fed, we've got a lot of Fed commentary coming up and all that stuff. That's more dovish. The tariffs start getting resolved. Everything's great. Yeah, we can come back up here. We'll probably have a little trouble there, and that 786 is probably the last. If we can get to there or through there, we're kind of golden. But I'm bullish by nature, I guess I would say. I'm not that bullish right here. In fact, if we get up here again, I'm probably going to fade this thing back down at least to that low, and then probably lower than that. I wish I had better news for you, but I don't. If we compare that to the NASDAQ, kind of the same pattern, right? There's our 50% retracement under the 200-day. It's just ugly. That's just not looking good. You see the 200-day here, typically that will hold, right? And if we go back, well, we'll do it on the ES. We go back and look. Let's just do I don't know how far we want to go back. Let's just go back here. As you can see, now this is going way, way back, but as you can see in recent history, there's not too many times, that was COVID right there. There's not too many times we get below that 200. Now this is on a weekly chart. It's different. Yeah, it's apples and oranges. But the point is that in general, you don't get below that 200 very often, and it acts as support and all that kind of stuff. So let's look at a couple of others. Let's look at the rut right here. So the rut, and this is a 1-year chart. All these are 1-year charts. We're way below the 200 here. Again, there's your 200 down here, right there. And it doesn't have to be exact, but this is just blew right through it, right? Like it's not even there. Of all of these, honestly, if someone says you have to be bullish, I would be bullish on the rut, the Russell 2000. If someone said you have to be bullish and you have to wait 6 months, okay, I think the rut's going to be higher 6 months from now. But luckily for us, we don't have to make those kind of choices. All right, lastly, we've got the diamonds here, and again, we are above the 200 here. Diamonds have some financials, industrials are kind of helping it out a little bit, but it still looks pretty ugly, right? I could get into names. If we look at Amazon, the Mag 7s, Apple, Nvidia, Tesla, all that kind of stuff. Well, speaking of Nvidia, we'll look at Nvidia real quick. Netflix actually is holding up our okay. Nvidia not looking good, right? And I know everybody wants to buy this dip in Nvidia and all that kind of stuff, but it's just not looking good. I don't have any. I'm watching it, but I'm actually not even really interested in buying it yet. I'll watch the NASDAQ for NASDAQ to turn. Maybe we'll start to get a little more upside there. But anyway, that's really one last. We look at the VIX here. So the VIX, of course, is spiked on that low in the market, and it's come back down. So this is what's confusing. The VIX is at 18.33, which is this is a 1-year chart. That's kind of sort of, it's a little high, but it's it's not extremely high. So this is saying there's not much fear in the market, right? So maybe maybe we do break through and keep on going up here. I don't know, but it's going to take some pretty good news, some pretty good change in sentiment. The market's very bearish overall. It's risk off, that kind of thing. I'm very light on trades. We've only got in the bias portfolio that I have that I run at Simpler. I have one trade on, and I'm just sitting on cash and just waiting. And that's the best thing to do in this market. You got to be careful. Use tight stops. When in doubt, get out. That kind of thing. But other than that, there's just not a lot to do except to wait. Now we've got PCE, which is that's the most important indicator that the Fed looks at on Friday. This week on Friday, PCE, the Fed will be watching that, and maybe that gives us a boost or gives us some headwind. I don't know. The following week, we will have payrolls then. On the 4th, we've got CPI on the 10th, PPI on the 11th. Those are all important. There's not a Fed meeting in April. So, we'll have some Fed speak, and maybe there'll be some Fed commentary, but we're kind of on our own right now until we get, again, more favorable data points, or a shift in sentiment in the market. So for now, be very careful. Keep cash on hand. Keep powder dry. Don't take trades unless you have a solid edge on the trade. And then when you do, even if you do have tight stops in place, and just be very nimble in this market. That's the best thing you can do, I believe. So with that, if we can help, join us over at Simpler. Come see me in the bias room. I'm in the bias room and the main room both. We have a lot of good traders there and a really good trading community. So come and join us, and we will get through all this together. And again, the other thing, or lastly, the other thing is that a bad market or a choppy market like this doesn't mean we do stay light and we do stay nimble, but it doesn't mean you can't make money, because we can trade the market up or down either way, and we can make good money in a down market. So keep that in mind as well. So with that, let me wind it up. Again, let us know if we can help. Thanks for the time, guys. I appreciate it, and I will talk to you soon. Thanks.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments that I ever made in my life.
It's helping me find consistency. It's one of the things that won me